Target Trading Academy.
All right. Good afternoon, everybody. Preston Vogl here at Target Trading Academy with today's micros market recap. We're going to get a jump on it. We're not quite closed in the equities. It is Monday, October 30th, just before the close, but we are closed in gold and oil. And with how slow the equities are moving, might as well just, do it now. But with that said, let's get started with oil. Oil opened inside of its range from yesterday for all intents and purposes, below that close that was up here. And they just ping-ponged between these HVA edges. Remember, these are drawn the night before. You can see the response that they had at them. And they finally busted through it and just kept with that momentum. And then they got some support resistance from this prior low on Friday, put in some new contract lows. And they're just settling out here on the day down from Friday. And then gold, if you recall, just kept going up through the close on Friday. And then they settled out. Opened up Sunday evening. We're still gap up, and we opened up in the pit, and we never got back down to that range or even the close. And that range high was right there, and this is our contract high. So they made an attempt, but it was short-lived. They used it as support rather than, rejection, and just bounced back up. Not really making much headway, more likely just going sideways. But with that said, we are finishing net positive on the day. Now, as far as our equities go, it was a little bit slower of a day. Mondays can be a little bit slower. That doesn't mean you don't have any good opportunities. It's just more likely going to be a longer day for something to set up. Now, we can get some extremely volatile days on Mondays. There's no exception to that. News can cause that. There were no news announcements. And quite frankly, when you have these slower days, especially on a Monday, you get typically more of an orderly move. Now, we didn't have as much of an orderly move today than we did on past Mondays, but we still had plenty of opportunities in our other markets. The equities were a little bit of a hard to explain. It was a little bit more consolidated movements, which just are not ideal. But with that said, we opened inside the range, well above the close from Friday. And you can just see we do have good response at those edges, but we just got there so many times. It's very frequent. We initially just started climbing, came back for some support at this edge after they broke through it. And you can just see these very consolidated bars the whole day. So it wasn't the greatest of setups, but we did have plenty of opportunities right at the initial gate. They just started beating a dead horse and hitting those edges frequently and repeatedly. And once you're there that often, your stops have to get extended out just because of naturally they're moving lower and such or higher on that edge. But we did ultimately start climbing once more. And as you can see, once we got to a new level, they're having a tough time breaking out, and they're just consolidating. And that's pretty much the same as the NASDAQ, opening above that close and just starting to consolidate once more. So you can see the response at those edges. There is a response. It's just, like we said, it's just very consolidated and choppy to say the least. And those aren't conditions you necessarily want to be trading in. You have to extend out your stops, like I've said, just because of that variable degree of choppiness. You get a lot of support resistance kicking in a very tight space. But ultimately, we are looking like we're going to be finishing net positive in both those markets. If you're interested in learning more about the methodology that we teach in the rooms and the levels that are handed out the night before, feel free to reach out to us. Look forward to seeing you in our rooms. We'll see you there.